Hi, we want to talk about the flows and positioning on the Russian market. As you might know, we have got a multi-year product where, as a largest broker on the Russian market on the Moscow exchange, we follow and reflect how the Russian retail, our clientele, is positioned at this stage, and also track what's going on with the global money, especially with the global emerging market money, whether they are investing or the investors are taking money away. Recently, as this graph indicates, the Russian retail has become extremely optimistic. I would say from mid-April, we see the degree of optimism being as high as we rarely saw in the past. That is partially due to the fact that the Russian central bank is aggressively cutting its rates, and private investor is being pushed on the equity market, and Russia stocks go hand in hand with the global equities, and people invest overseas, invest in the US, but also the Russian market. They do invest in Russian stocks that are relatively inexpensive and offer very, very high dividend yields. And at the same time, we still can clearly see that the market broadly follows the patterns with the global money. The line on the graph indicates that the RTS index, the dollar-denominated Russia equity market index, correlates much more with the global flows than with the local retail for the time being. And as you can see, the near-term bottom was reached around mid-March, and flows since then until mid-April, late April, were on the improving side. However, recently we see that the outflows have resumed, and there are several reasons for that. Number one is Russia and large emerging markets unfortunately have climbed atop the infamous COVID new infection ranks, and that is not a positive in the eyes of investors, obviously, as they lag Europe, lag the United States in that respect. Number two, the economic impact, as the April PMIs indicate in largest EM economies, except for China, but specifically in Russia, in Brazil, and South Africa, was pretty dramatic. And these have been the markets that have been growing in terms of economic activity. So investors are aware of that as well. That taken together leaves us with 12 consecutive weeks of outflows from the global emerging market equity funds. Although Russia is relatively preferred, as we can see, because of Russia product inflows, marginal inflows that exist, it's very hard to completely decouple from the emerging market. So our near-term take is neutral to slightly negative for the Russian stocks within a few weeks, and then we should really see what the actual impact will be on the earnings and as well as on the well-known high dividend yield of the Russian stocks.